Hello, everyone, to episode 2 of the mentorship. We're going to be defining what ranges are. So, initially, there are two types of ranges when looking at a candlestick chart. There's price ranges and your time ranges. So, your price ranges will sit on the X axis, and it would be you can define price ranges by any price level. You can have a high and a low, any high and low, and then everything in between. So if you have just a random price leg, you can have um, from your PD raise to relative premium discount. That can be your price range. You can even say that each fair value gap is its own price range. Each order block is its own price range. Each wick, each body, those are all price ranges. Now with time ranges, those sit on the y-axis, and you'll have a starting time and an end time, and then all of the times in between. So if you have, let's say our time range will start at 9 a.m. and it'll end at 10:30 a.m. That is your larger time range. And then all of the times in between, whether it's 5-minute increments, 1 minute, 15-minute, 30-minute, from 9:05 to 9:10 or 9:05 to 10:30, those are all time ranges. Now, when you combine time and price ranges, you get dealing ranges. Um, Dealing ranges will show what an asset or a group of assets trade within a period of time. So, going back to 9 to 10:30, the highs, the very high and the very low of that time range will be the very high and the very low of your dealing range, and then everything in between it, from every small price leg down to price leg up, they will all be a part of that larger dealing range. So as you can see here in this example, um, from 9 to 10:30 a.m., from the opening price to the high to the low to the closing price, that's all in this 90-minute dealing range. And basically what you're seeing is a two-dimensional chart that shows price movement within a given amount of time. And that answers the question of what exactly is a candle? A candle is a visual of measured price movement or delivery in a measured amount of time. So if you have a 6-hour candle, you have 6 hours worth of price action. And if you wanted to, you could break down that 6-hour candle into 6 1-hour candles, with each 1-hour candle being worth 1 hour worth of price action. So I'm getting into quarters and quarterly theory. Generally, quarters are 25% of something larger. And in this case, we're measuring time. So in intervals of 25% of a larger time range, those are considered quarters. But every quarter is an aspect of doubling, but not all quarters will be efficient. And I'll touch upon that in a little bit after I get into basic interval alignments, like the stuff you can use every day. So we have 1 year, and in each year you have 4 quarters. Each of those quarters would be 3 months each. From a month open to a month close, 4 quarters, you have 1 week worth of price action in each quarter. Now from a week open to a week close, each quarter it will be 1 day each. Now, I know there's 5 days in a week, right? And we'll talk about that again with this up here. But moving on, in each day you have 4 6-hour quarters. Those are your sessions. And then within each session, you have 4 90-minute quarters. Now, coming back up here into every quarter is a aspect of doubling, but not all quarters will be efficient. Using this 1 week range as a example, you can technically split this 5-day week from 5 equal parts to 4 equal parts, but that would not be an efficient way or an efficient system for breaking this entire week down. Um, so like if you were to break down each week manually into 4 sections, it'll change um, the amount of time between each quarter occasionally because we have holidays and holidays shorten time ranges, and then your time becomes sporadic. You don't want that to happen because time is a fixed factor. Um, the same issue would occur if you were to, let's say, take a 1 hour interval and start counting 5-minute intervals 3 minutes late. So from 9:03 to 9:08 and count that as a 5-minute interval. That's not an efficient way of counting time. So it's very important to be consistent when measuring time. And so going back to this week, Friday, just like the rest of the days of the week, they all work the same. Even um even if they're not like actually quarters, they all work the same because it's an efficient way to break down the week. They're each day they're all aspects of doubling. And what you will learn eventually is that quarterly theory, this up here, um, is really just naming the basic quarter times. Um, it's really just the name. You can notice flaws, which we brought up here with the 5 days in a week, even though it's supposed to be quarters, right? But that's because this is in its simplest form. Now, if we expand beyond quarters with doubling theory, we can get things like thirds. This is just an example. We're not going to be going into thirds at all in this mentorship. It gets very, very complicated. Even if it may not seem like it can get complicated, it will get very complicated. So we're not going to be doing that just yet. But as an example, right, each quarter of the year is 3 months each. You, there's no efficient way to do it so that you can get consistent quarters, consistent 25% ranges of a 3 month large range. But it does consist of 3 individual months, which you can break down into 3 separate ranges, creating thirds. The first month, second month, third month, and then the first 4 weeks, second 4 weeks, etc. And we're just gonna leave it at that. But otherwise, apart from taking in the example, ignore this completely. Do not try to get into thirds. Now, okay, price action interpretation. This is when we're going to deviate from here. Yeah. So, um, this is going to be a bridge um, into the next episode, but I wanted to go over um, how effective quarters can be when anticipating price movement and price delivery. We're going to be doing sequences in the next episode, but this is more so about timing and understanding um, what quarters do to price. Okay, so generally, each quarter will work to gauge the following quarter, to put the following quarter in the best position possible for absolute efficiency. And that regards doubling theory. So, like right here, we have these 3 quarters, okay, and this level right here, this is a previous week equilibrium level. So on Tuesday, that was its primary draw, was that previous week equilibrium. Okay. Um, that was that objective. Now, what will this do to help gauge this quarter, Wednesday? So this is Tuesday, Wednesday, Thursday. What has Tuesday done that helped gauge Wednesday? That will eventually lead to Wednesday helping Thursday. So here, all right, um, we delivered off of this previous week high down here, and we hit EQ, and that presented the opportunity to reaccumulate for either further downside or for buy side delivery. Now, within this Wednesday range, it needs to have an objective that'll help the following quarter, that will help satisfy a criteria that will help the following quarter. So what this does is, in hindsight, of course, it comes down and it rebalances at least 25%. It looks like around 40%-ish actually of this previous day. And what that does is it sets up price to deliver higher. It satisfies some form of reaccumulation to then present itself higher. And that was this quarter's objective. Okay? This quarter's objective was to satisfy criteria for price to move higher. Now, some people could have been like, I was expecting price to continue up here on Wednesday, but instead we ended up chopping around. Now, it could have happened, but we didn't have any criteria pushing us to the upside within this quarter. All right, and that's what this quarter did. That was this quarter's objective, was to satisfy a rebalance, to reaccumulate, that will help a following quarter do the buy side objective, which is what this did. Now, that's why sometimes when you try trading NYAM, you're trying to get a trade in, but the price action looks horrible. It's just chopping around. It looks exactly like this. Okay, so you step away for a little bit, and then you come back around lunchtime, around 12 p.m., and then we just start ripping. NYPM ends up becoming the main expansion. And that's because NYAM was gauging the following quarter by meeting a certain criteria to help fulfill the high time frame draw, which is stuff you should be noting down and looking for every single time. Stuff like that happens, okay? But yeah, it's so kicking off. Yeah, so you're anticipating price movement using quarters with individual objectives for a higher time frame objective. Okay, so we have this entire week, this is its own quarter. We're using these individual quarters to gauge the high time frame quarter as well. All right, that's where your alignments come in. Okay, so here I'm going to write down use quarter alignments to interpret low time frame to high time frame and vice versa. High time frame to low time frame. Okay. So the way that works, right? Let's say you were bullish on the week. You find your high time frame draw being satisfying this equilibrium of this previous week over here, and then eventually leading to this high on the following week. All right. You play your low time frame quarters to meet individual criterias that will end up building a narrative, building this whole week's story to the high time frame objective. Okay, so just step by step, real quick. We took out previous week high, that was Monday's objective. Reaccumulate, present an opportunity for the following week to do its thing, which is what it did. Okay, we found footing this high, reaccumulation into expansion. We hit a new reaccumulation level. We allow the next quarter to do the reaccumulating. There's probably some CICs down here, but we're not going to get into that. We rebalance that range in this quarter. That was that quarter's objective, which then allows the following quarter to meet the buy side objective of expanding higher, which somewhere around here, I'm not going to go look for it. All right, but there's a reason we didn't take this high. Okay, there's a reason we didn't take this high, and that's because this high was the following week's objective. It was this week's objective. So we have individual day objectives, help building the narrative for this week's objective, and then you use this whole week's objective to find the following week's objective. Okay, but the whole idea is that previous quarters are used to put the following quarters in the best possible position for the following quarter to meet their objective, which is what it did here. We close to the high. The first thing we did was take out the high, and then if we even break down these quarters, you can see that very similar things happen like in the previous quarter, right? This day took out that high, and then we start rebalancing in here. Okay, and then in this quarter over here, we look at this range, we take out the high, we do some low time frame stuff in here, low time frame accumulation, and then following quarters on the following days, here going into 9 o'clock, which is a 90-minute quarter opening, right? You have the larger expansion, and it just keeps getting smaller and smaller, bigger and bigger. Everything works together. Right? That's the main thing I want you to get from this, is that everything works together. Low time frame interpretation to high time frame interpretation, and then from high time frame interpretation from this whole month range, all right, taking on that week high into low time frame interpretation, which would be the individual week ranges. All right, setting up for sell side delivery, and then you could break it down further, like we did, individual days, setting up the following days, and then like over here, where the sessions in the 90 minutes we're setting up for this session, this 90-minute, right? They all work together. That's how that works. All right. In the next episode, we're going to be going over sequences, like I said. We're also going to be doing some MMXM stuff with some ICD logic on terminus and point of origin, and using quarters to gauge and interpret those sequences. So I'm excited for that. But other than that, catch you guys later. Hopefully this made sense.